Southern Palladium has been the centre of investor interest this week after the company was granted environmental authorisation for the development of its flagship Bengwenyama PGM project in the Bushveld complex, representing a key step for the company as it paves the way for the award of the mining right, a major milestone for Bengwenyama's development. With that progress, coupled with the likely release of a revised PFS in the next month, and Southern Palladium's value proposition is becoming increasingly clear. To discuss this and more, I'm joined by Bridge Street Capital analyst Dr. Chris Baker. Chris, appreciate your time today. Now, as the company outlined, the EA approval is a critical step as part of Southern Palladium's mining right application. How should investors look at this announcement in the context of Bengwenyama's development pathway?
Yeah, g'day, Alex. Thanks for your time. Look, this is clearly a very important first step towards Southern Palladium getting its mining right for Bengwenyama. Without a mining right, they have no legal title and the legal ability to mine this project. So, as with mining leases in Australia, it is really the important aspect. And environmental issues are important. It is a fairly intensely populated area. There's a lot of mining stuff going on there, but you need to get the environmental approvals, and environmental approvals, as we all know, are becoming harder and harder to obtain. So the fact that these guys have been able to work with the locals, remember the locals have got 30% of the project, so it's in their interest, but they've been able to appraise the locals of the issues that will be attached to mining. It is underground, so lower impact than open cut, of course, and the fact that they've had no objections thus far really does pave the way for a positive outcome for the final approvals, for the environmental approvals, and it is in a 20-day period, so objections could come in, unlikely we think, and then that should translate to a mining right. We're hoping kind of in June. It is a little bit later than we had thought, but the wheels of bureaucracy in this country as well as South Africa can move pretty slowly. So I think, in a nutshell, to have legal title, mining title over this project is very important. And I guess the share price performance over the last couple of days has demonstrated why the market was concerned, and that is they weren't hearing any news about it. So therefore, there's a problem. Well, clearly, that problem appears to be progressively disappearing.
Now, also of note was an update on the optimisation works program for Southern Palladium's comprehensive pre-feasibility study at Bengwenyama, published last October. Can you talk us through the appraisal of a phased approach to project development and why that's important for Southern Palladium's value proposition?
Yeah, no, I think it was interesting that they chose to mention that. They have alluded to the fact that they're looking at various options. And again, just to remind you, the capex attached to the project is to the project as it appeared in the PFS is hefty. It's $385 million. So for a small company, that's a big bite to chew, unless you've got a partner. And I have absolutely no doubt that they've been canvassing a whole bunch of options with regard to partnerships. But I guess you need to have a number of options, and that is, how could this be a bite-sized chunk for a small company? And small gold miners in this country do it just as well as anyone anywhere. So I think that's the approach that they've taken. To remind you, the original plan was to move to 2 million tonnes, in an unstaged development. But clearly, they're looking at a more modest scale of project, 80,000 tonnes a month. They quote about 1 million tonnes per annum, and this should be proportionally significantly lower capex, and therefore an easier bite to chew. And I kind of look at it and call it a capital light option. What are the ways that they could actually look at reducing capital? So instead of twin declines, look at single declines, as you would do in a typical WA gold mining operation. Use truck haulage rather than conveyor belt haulage for ore. That sort of thing, I think, are the areas that they've been looking at. And an interesting comment, and I must say I'm not entirely certain what they mean by that, but they're talking about using infrastructure associated with other mines, sort of underutilised infrastructure on the Eastern Limb. And as we know, there's half a dozen mines on the Eastern Limb, some of which are doing very, very poorly at the moment. A couple of quite strongly cash flow negative, quite low grade old mines, that sort of thing. So what synergies could evolve from that? Don't know. They haven't been clear about that, but they have been clear that anything that happens contingent on satisfactory commercial terms. But it does suggest that perhaps they're starting to knock on a few doors to find out where those synergies might be. The analogy, of course, in Western Australia, Spartan, and the what are Ramelius going to do with Spartan ore? Without doubt, they're going to truck that up to Mount Magnet, in my mind. And is that model something that could be appraised in the Eastern Limb, or shared milling facilities? I just don't know, and it'll be very, very interesting to hear the conclusion of this revised PFS in June. So we've got two important milestones. We've got the mining right. I'm guessing should be through in June. The environmental issue is the major stepping stone, but bureaucracy is a stepping stone as well. And then we've got the updated PFS, sort of, should we say, right sizing the project for a smaller company. So it's been pretty quiet over the last few months with SPD. They're waiting for all these approvals. I guess the market becomes a bit frustrated with that, and no news is bad news. But as it turns out, no news has been actually not been bad news. It's been very good news, and to see these environmental approvals through, as well as at the same time looking at other development opportunities, we think is very positive.
Now, Chris, these key project updates at Bengwenyama have also been accompanied by some bullish price action on global PGM markets lately. What's your view on the recent price action, and are there any catalysts that investors should be aware of?
Yeah, it's been interesting times. SPD have the advantage of having the chairman of the World Platinum Investment Council as their chairman. So he's certainly peddling their interests in London at the moment. This week is Platinum Week in London, an annual event, big event. All the buyers and all the sellers. It's a huge event happening. I think it started yesterday and is on today and tomorrow or something like that. So this is important, and associated with that, we've seen some quite interesting statistics that have come out of that. Very, very strong investment demand. We've seen platinum and palladium back over $1,000 an ounce overnight. Rhodium has been the star. It's up nearly 20% over the last 3 months. Platinum up about 7%. Palladium moving probably towards a balanced market, up about 3%. But what we've seen, according to the World Platinum Council, is that the investment demand, particularly for platinum, has been very strong, driven by Chinese investment demand, both bar demand and jewelry demand. I think the numbers were something of the order of investment demand up about 28% quarter on quarter. So a very, very strong demand scenario. And I think it's probably investors, like all of us, that are looking to preserve value. Gold has been a great preserver of value in the last rally, last big rally, I should say. Silver's run pretty hard. PGMs have been lackluster. So maybe this is what we're seeing, that Chinese investors and maybe investors globally are starting to move towards PGMs. And it's a pretty tight market as well. So it doesn't take a lot of buying. Unlike gold, it doesn't take a lot of buying to see some quite reasonable price action. They also pointed out in the press that Shanghai Platinum Week is on shortly in the second week of July, and the Platinum Council is suggesting that that's going to again create elevated platinum demand into the future. So I think focus perhaps going a bit away from gold and silver and more towards PGMs. That's what they're kind of intimating. Their crystal ball is probably a little clearer than mine. It is a pretty opaque market, but it is good to start seeing price performance emerging. Simultaneously with that, we've seen mine supply decline. That's down, I think, 13% quarter on quarter. Again, driven by really tough times, particularly in South Africa. I think last cost curve I saw would have had about half the industry working at break even to negative cash flow. So it's really, really tough out there with hearing of mines closing, threats of mine closing. There's a lot of stress. So that's good, bottom of the cycle sort of performance, and we can see that this could be very much a turning point. We've heard a lot, and I think on this program we might have spoken about it before. PGMs and platinum in particular has been in deficit for at least the last 18 months or 2 years. And you say, well, if it's in deficit, why don't we see commodity price performance? The answer to that is the above ground stocks have been satisfying demand. So what we need to see these above ground stocks, again, not easy to see, but again, the Platinum Council has intimated that over the course of the next little while, we'll see those deplete, and that could easily be a turning point for PGM prices. Why? Because what it's doing is, higher prices will incentivize more production, and more production will be needed for investment demand, auto industry, and all that sort of thing. So it's kind of following a pattern that we'd expect. I guess we probably expected a bit of PGM price performance a little earlier, these deficits. But again, the reason that the price performance has been delayed seems now to be perfectly obvious. So, I think the next few weeks are going to be very interesting, and certainly very interesting going into July with with Shanghai Platinum Week, and then the Southern Palladium, of course, some good news from hopefully the mining right and their updated PFS.
And just finally, Chris, the market response to this week's announcement has driven a material uplift in price and volume for SPD over the last 2 trading days. Taking into account the development work carried out at Bengwenyama to date, does SPD still look undervalued to you?
I don't think undervalued's the descriptive. I mean, it's just crazy price. I mean, it's got down to a market cap of $19 million. And for $19 million, you've got a PFS at an 8% discount rate of $1 billion. Not using commodity prices that far away from where we are at the moment. This is crazy stuff. I mean, it's got 6.2 million ounces of reserves, astronomical resources. Don't even worry about resources. So they'll be mined well after I'm dead and buried. But, they've got a 30-year mine life. I mean, in my judgment, this is a tier 1 project. It's long mine life, high grade. This is the important thing. This is one of the highest grade blocks of UG2 reef on the eastern limb, and it's grade that's really causing problems with these mines, not being helped by commodity price. This is ore that the other miners will want and may look to take over the company. So now it's bounced strongly. Pleased to see that in response to the environmental impact results, but it's still a $25 million company. So the 6.2 million ounces of resources. This really is extremely inexpensive. They've got $4 million in the bank. They've done a wonderful job with $15 million. They've taken this from a project to a PFS, drilled 30-odd thousand meters of drilling, done a whole bunch of metallurgy. They've done a great job, and now they've ticked the environmental box. I don't know what else investors want to see out of this, but to me, it just looks very, very inexpensive indeed.
Thanks, Chris. Appreciate your insights as always. Thanks for joining me.
Thanks, Alec.